In this video, we're looking at PayPal stock, ticker PYPL. PayPal recently reported their fourth quarter earnings, so we will look at this report and then I will tell you two things that I really like about PayPal and two things that I do not like. And then in the end we will try to come up with the fair value of PayPal stock. We will use free cash flow multiple as a valuation metric to determine if PayPal is a good buy at this price level. So let's get started. First of all, if you want to get updates about the portfolios of super investors, soon 30-F filings will be available. So I will be making videos about super investors' portfolio. You can subscribe by pressing the button under the video. Okay, so PayPal had a huge decline in the recent years. So many people believe that PayPal has no future. It has a lot of competition. But I believe that PayPal is just a maturing company. So the question is PayPal a good buy right now? So let's look at the recent 10Q report. So PayPal showed their revenue for the whole year of 27 billion. This implies around 10% growth rate from year over year. If you look at the revenue for the next 2 years, so this is what analysts are projecting, we can see that the revenue, according to analysts, is supposed to grow also around 10%. So we still can see the revenue growing for the next years according to analysts. They also posted 5.1 billion of free cash flow. If we divide the current market cap of 90 billion to their free cash flow of 5 billion, we get approximately 17.6 free cash flow multiple, which is lower than many tech giants have. So yes, PayPal is a maturing company, their growth rate is slowing down, but they are still able to grow their revenue and their free cash flow. Around 10% according to analysts, so not as bad as it seems. The free cash flow multiple is around 17, which is again much lower than many tech giants. Okay, the first thing that I really like about PayPal is that they are able to buy back the shares. So in the previous year, they were able to buy back around 2% of their shares outstanding. So this rate was higher in the last year than in the previous years. So it's a very good sign that company is buying back the shares. And again, the shares buybacks increased for the last year. As Warren Buffett famously said, if they keep doing that, I'll be the last shareholder. The next thing that I really like about PayPal is their free cash flow yield. So their trailing 12-month free cash flow is around 17. If we take the vice versa of this metric, the free cash flow yield, in this case, this is next 12-month free cash flow divided by the current market cap. So right now it's around 7%. So they are able to generate a lot of free cash flow on their market cap. So PayPal is a cash flow generating machine. Okay, so what I don't like about PayPal. First, it's their management. There was a lot of negative news when PayPal decided to make a fine of 2.5 thousand. Later they reversed this policy. So I will not dig deeper into this topic, so everybody has to decide for themselves. But there are definitely several questions about the management decisions. The second thing that I don't like about PayPal is that there are a lot of payment services. For example, I use Apple Pay. A lot of my friends are using Google Pay. In China, Alipay or WeChat Pay. So there are a lot of many much more popular services. And PayPal is only the 5th largest payment service. So yes, PayPal is able to grow their revenue, their free cash flow, but they have a lot of competition. So there are lots of questions about their future. Okay, so what about their valuation? If I look at the analyst projections for the next 2 years for free cash flow of PayPal, it's about 7.3 billion. So this is the free cash flow in 2 years, in 2024. If we look at the price to free cash flow multiple for the last 3 years, we can see that it was more than 30. So should we use this multiple in the future? I believe we should use more conservative number. So if we look at price to free cash flow multiple for the last year, not 3 years, it was closer to 16. So let's project the price of PayPal in 2 years, in 2024. So we take the free cash flow that is projected by analysts to be more than 7 billion. If we take the price to free cash flow multiple of 16, which is, I believe, on the conservative side, the projected market cap will be close to 118 billion. The current market cap at the moment of running the video is close to 91 billion. This implies an upside of close to 29%. So from the current price of $81 per share, this implies that the fair value of the stock is close to $104 per share. So 30% upside in 2 years if we use the free cash flow multiple of 16, so not a bad return in a conservative scenario. What if we use higher free cash flow multiple, which is, I believe, maybe reasonable? So if we use the free cash flow multiple of 21, which I believe is on the high end, the projected market cap in this case will be 155 billion, which implies an upside of 69%. In this case, the fair value is $137 per share. So if we use the free cash flow multiple, which is closer to what it is right now, the upside is around 29%. If we use free cash flow multiple of 21, which is, I believe, on the high end, we get the upside potential of around 70%. So again, this is the projected price in 2 years. So according to this metric, the stock offers a significant upside potential. Okay, so if analyst projections are correct, the stock offers significant upside potential. But the stock offers a lot of risks. So if their free cash flow is lower, the stock may trade even at lower multiples. Also, the management and competition brings a lot of questions. Also, if you want to know more about other stock investment ideas, here's a video on one of other discovery, what to expect in the fourth quarter report. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching to the end and see you in the next video.